Hey, you all right, little buddy? Golly. Well, she came out of nowhere. Sorry, I'm about to exchange insurance information. Hang in there, little guy. Derek! Exclamation point. This is exactly what I've talked about. Have you seen The Big Short? I have seen that. It's a great movie, by the way. We all know how this ends. My advice, start investing in timeshares. What? The crash is coming? No. The media? Okay, the media is asking this question, really? That makes sense. All right, well, media, chill. Calm down for a minute. There's a big difference between a market crash, and I'm actually gonna tell you the rest about it over here, and a coffee shop. All right, so first we need to clarify something. A market crash is not the same thing as a market correction. Let me say that again. A market crash is not the same thing as a market correction. So what does that mean? If you look at the headlines in the news and you watch anything on social media, you're gonna see crash, crash, crash. And you're gonna be like, oh my gosh, we're headed for a market crash. What are we doing? What's gonna happen? I'm not gonna be able to buy a house. So you stop buying houses. I'm not gonna be able to sell. So you stop selling your houses. Or I need to sell right now because the market's about to crash. So now you have a lot of inventory and then not as many buyers. It's just, you get to a point where your headlines start to freak you out. Calm down. It's okay. Your realtor needs to use their fiduciary responsibility for you as their client to explain that this is not a market crash. This is what's called a market correction. At least here in Middle Tennessee, we're somewhat insulated. Even back in the market crash of '08, which was an actual market crash, it was insulated here. It wasn't hit near as bad as some of your other major markets. It's all about perspective. So a part of that perspective is you as the agent need to know that you don't need to price your houses or your listings based off of the news outlets and everything they're saying about the market crashing. You don't need to price your houses 20 grand low just because you think that it's not gonna sell. You still need to price it based off of comps because those comps are what support that sales price. Just because you might not sell your house in one day doesn't mean that in 2 weeks or 3 weeks it won't sell for the same price. Just try to base it off of your comps like you would always do. Don't base it off of the news outlets. So let me ask you this question. What is a normal market? Honestly, in reality, where we're at right now is normal, or at least it's getting there. So being on the market for 2 weeks or being on the market for a month is somewhat normal. Having multiple homes to look at if you're a buyer is normal. Like, that's a good thing. We need that. We need that balance. Lastly, let's talk about opportunities. Honestly, in a normal market like this, in a correcting market, it actually leaves room for opportunities. See, in a seller's market like we've been in the last 2 years, there's not much opportunity. You either pay that premium price and well over, and you're fighting against a ton of people trying to buy that one property where there's only one opportunity and multiple buyers, or you as the buyer now have the opportunity to look at 5 or 6 houses. Choose which one you like. You can ask for some closing costs, see if you can get some closing cost coverage. There's a lot more room there for the buyer and seller to come to an agreement instead of it just being on the seller's terms. But it's also good for the seller because yes, you're not necessarily being able to get $50,000 over asking, but those prices have risen so high in the last 2 years that you're able to get a premium for your property. So it's a great spot to be because you're still making a good amount of money on your property. And then you investors, you think, oh, in a seller's market, we don't have much opportunity. I can't go get a good deal on my rental property I want to buy, or I can't get a good deal on my flip I want to buy. Well, now with the inventory levels going up a little bit, you're able to do that. So you cash buyers that want to buy that investment property are able to do so. You investors, first-time investors that want to use maybe a second home, 10% down conventional loan to buy that second home to use as an investment property can now do that. You have more opportunity. So look at it as a positive instead of a negative. A market crash is never really good. I'm gonna be honest, it's bad. A market correction can be either good or bad. In this case, I believe we're up on the good side. So if I could give one piece of advice for an agent right now, whether you're new or whether you've been in it for 20 years, it's a market correction. Understand that you need to keep doing the basics. Go back to the basics and keep doing what you know how to do. Know how to price properties. You know how to help people find homes. You know how to help people find investment properties. You know how to do these things. Don't go recreate the wheel. Stick with what you know, stick with what you've been trained on, and you'll be just fine. Hey guys, thank you for joining us on another episode of Smart Moves. I hope you guys learned something today. Got a little bit from what this market crash or market correction is. And I hope you guys join us on the next one. Remember, I do help people buy, sell, invest in real estate. That is what I love to do. It's my passion, is helping people just like you. So please, if you're in the Middle Tennessee area or moving here or moving out, I want to help you. Call me. See you guys. Is that good? Great. Between a market crash, what am I, Irish? That's not even what Irish people sound like. That's so embarrassing. This is all over the place. As a part of the perspective, you as the realtor, you as the agent you cannot do that right now. What am I gonna say? Ready? Should I do a little drink goofy thing?